What is up everybody, my name is Gifford and welcome back to another stock market video where I try to make money from the markets. This video today is aimed at the person who hasn't even started investing. So I'm going to go with you today and guide you on how you can make your own portfolio and have $1,000 after 1 year. While there's many platforms, the one we're going to use is Sharesies. So because this is a beginner video, we're not going to talk about really the fee structure or anything about the companies and in-depth analysis or any metrics so much. We're just going to basically look at the overall plan of investing and how to put a plan in place, how to follow that plan and really go after the goal of having $1,000 and being able to grow that money long term. So while a lot of people might not think $1,000 is a lot of money, but it's all about figuring out a goal and start your investing journey, so therefore you can prepare for financial freedom. Hit like to support the channel, and if you're interested in investing, feel free to hit subscribe. With that said, let's get on with this video. One of the reasons I started stock market investing, while I thought it was risky, is actually that the term deposits, that the money that you put into the bank to then grow, is pretty low. As you can see here, it's only returning after 1 year 1.2%. And the crazy thing is, while you put your money into these banks, these guys here are probably investing it into the stock market and getting a much bigger return. So a popular fund that people start investing in when they first get into the stock market, which is really safe and it's a broad index fund, is the S&P 500. And here, just looking at Google, the average return of the S&P 500 since its inception from 1926 through to 2018 has been approximately 10 to 11%. There's a lot of numbers, different numbers between 8, 9, 10, 11%, but I'm just going to say the average is 10%. Just to make it simple for this video. So if we're trying to build a $1,000 portfolio for our first year, what we want to do is work backwards, because that's how I find it's a lot easier to work backwards. So we'll type in $1,000 and we're going to divide that by 52 weeks. This then gives us $19.23, but we're going to round that up to $20 a week. So what we're going to try to do to build this amount, we need to save $20 a week and invest that into the stock market. So in the screen here, I'll put in the description, is a compound interest calculator. And basically this is going to be what motivates you to invest into the stock market. This is going to show you how money can grow if you invest over a long period of time. So with Personal Finance 101, if you invest your money, it can compound. So that money will grow even if it's a small amount. Over time, as you get serious about investing, you can then up that from $40 to $60 to even $100 one day if you really want to start compounding and growing your money long term. So we're going to be starting with $0 as our initial investment. We're then going to go to monthly contributions, and we're just going to say 4 weeks because that's about a month, so that's $80. So $20 times 4 is $80. And for the length of year, we're just going to put in 1, and our estimated interest is just going to be the market average, which is 10%. So we're going to leave the interest rate variance range empty. So we're going to come down, and the compound frequency, we're going to leave that on annually and hit calculate. So we now got the results, and we can see here that after 1 year we're just shy of $1,000, which is fine because it's pretty close already, and it's showing us $960. So now, through the power of compound interest, this is where the magic starts if you're a long-term investor. We're going to have a look now when we extend this to saving from 1 year to 10 years. Again, just staying with $20 a week, we can hit calculate and see how much we get. So now after 10 years of investing, we can see here that we could possibly get $15,299. And we can see the compound interest really starting to work in our favor with the money that we've put in and also the interest that we've been acquiring. And you can see these start pulling apart as the money that we're putting in and saving is now making us money. So let's just go into a situation where if we were young and we were 20 years old and we wanted to invest for our future, just $20 a week, we can see and change it now to 45 years and see what that looks like to see the power of compound interest. So here in the results, we can see here after 45 years, which is extreme, but this is really just to show you the power of compound interest. We can see we've got just pretty much under $700,000. So with investing your money into the stock market, remember this is only $20, but it really shows you the power of compound investing and long-term stock market investing. So if you're investing investing just $1,000, I highly recommend just using the Sharesies platform. There is some fees in there, but right now that's not important. It's all about learning how to plan and how to start investing into the stock market. So to open up an account with Sharesies, basically you just hit up in the top corner and hit sign up, and then it brings you to the screen and just pick what country you're in. So I live in New Zealand. So in this page you're going to have to fill out some of your personal details, and also you're going to need a form of identification. We're not going to go over this. You can find some details of how to fill out the application. It's really easy online to be able to get you signed up with Sharesies, and if you use my referral link it'll take you straight to here. So we're now into Sharesies, and this is what it looks like. This is my portfolio. It's just a little over $2,000, but yours will look a little different. It will probably be empty. So this is not financial advice, but I'm just going to take you through now how I would invest in the S&P 500 to try to get the returns that we were talking about before. So to do that, you come up here and hit invest, and then you go to ETFs, and in the search column you click in there and type in USF. At the very top of the list, it then brings you to Smart Shares USF 500 fund. So if you left click into that, it will then bring you the details of this fund right here. So at the top, this is the fund name, which is a Smart Shares USF 500 fund, and at the bottom here is the New Zealand Stock Exchange, but right here is its ticker symbol. I highly recommend that you continue your learning and then look up videos on what ETFs are and just general stock market investing videos to help you on your journey. So looking at a few basic metrics here, we can see that the fund, actually its 1 year price change, it's gone up by 27%, but the previous year has been really good for stock market investing. As for the future, who knows what will happen, because that's just the way the stock market is. And if we look at the 5-year graph, we can see that the stock price has been continually trending up, and obviously there are some dips, but if you keep investing long term into the fund, you're going to be growing your money and therefore growing your portfolio. And just to add for the extra detail, you can see this big dip here, and that was when the pandemic hit, and you can see that at $9.66 it kind of dropped all the way down. But as usual, you don't panic sell, and you can see that it fully recovers after about a year. So you'll just hold your money in there. The stock market is going to swing up and down, but you're going to do some more learning and you will see that this is just normal and this is what happens. But it's all about putting your money in, investing for the long term. So that's enough for the video. Really basic, but it just highlights the fact why it is really important to start investing into the stock market, and it is actually a lot safer than what people say. Like all things, there is a level of risk when investing, but the more you learn, the more you'll be able to get comfortable in the stock market. And really, as you can see, that the low term deposits at the moment are pretty bad, and you can achieve a much higher return in the stock market. But if you invest over in the long term, then you're gonna be much better off. So that's gonna be enough for this video. My name is Gifford, and I've been sharing my stock market journey since I've been YouTube for just a little over a year. If you want to follow and have a look at what I do, I have numerous brokerages and different accounts and different strategies. I'm also learning as well, but I'm really keen to make a lot of money in the stock market. I'm trying not to be too risky, but I am investing money that I can afford to lose, because that's one of the rules for the stock market. So feel free to subscribe to follow my journey, and also to learn a few things from someone that is starting out from the beginning as well. So may the gains be with you, and also don't forget to do your own due diligence in the stocks that you buy. Also do a lot of learning, and if you want to hear more from me, you can also follow me on Instagram, which I'll put up on the screen right now. With that said, thank you, and we'll see you on the next one. Goodbye.